Okay, awesome. So now this was price the way it looked before the news, and we waited, till the news was out, which was actually a positive news. The news initially caused price to go up, and then it turned around and it dropped. Whereas the expectation was that the price would continue to go up, and then when it trades down below the 21 SMA, I'd want to sell it. But now in retrospect, because we had a rally before the news, even though the news came out to be as expected, I the sorry, better than expected. The market used something called uh, buy on the rumor, sell on the news. So this was selling on the news, right? And now my trade idea was to go short, um, because since the price action should have been up, but it wasn't up, it went down. My trade idea was actually to go short from this price. And if I were to go short, I would be proved wrong if the price would go more than, let's say, 1.5689-ish area. That's my I'm wrong price, that my trade is not working. That does not mean that that's my stop loss price. My stop loss is at a different level. I have certain levels which I consider that the way the price action, uh, the way I predict the price action should be, does not materialize, and this is what one of those levels would be, because I expected, okay, good news, market did not go up, it went down, and now if I was expecting it to continue to go down, but if that were not to happen, it goes back up, then I would be in my analysis would be incorrect. So let's see what actually happened. Now the market went down, okay, and we went short from about 1.5675-ish area. At that time, I did not give you my stop loss and my take profit level. Sorry, I did not give you my take profit level. I in fact gave you my stop loss. I told you that I want to have about a 30-35 pip stop loss, and I want to make sure that we are at least 10 pips above this high here. Okay, and then the market rallied, and as you can see that the price now is gone above what I would consider a good trade. That means my analysis was inaccurate. I haven't yet lost money, but my analysis is inaccurate. I am at a floating loss of about 14 pips at this particular point. So now my trade analysis changes completely. Now I'm beginning to think that if the market had tanked right from this particular area out here, okay, I would have a different take profit level. But now that my trade has been has proved itself to be inaccurate, then I cannot have my uh, the initial take profit level. I have to change my take profit level to uh, with the new reality on the ground, which was that my trade analysis was inaccurate, and this entire movement misled me. So that's when Harvey asked me what would my my take profit level be. Should I put my take profit level at break even, or should I have another target? Do you remember that? Okay, and I mentioned that we'd have a take profit of 1.5654. Okay, now what was this 1.5654 based on, really quick? Okay, so we had this nice run up in price. I took my Fibonacci levels right from the low right up till the highest point out here. Okay, and I drew those levels. Now my take profit levels, in case my the market had not gone above the initial price, would have been around 1.5612ish area. This is where my take profit levels would have been, but we're not discussing that because that did not happen. The market price action proved my analysis wrong. So now my take profit level changes dramatically, and I mentioned to Harvey that I'm interested in. Let me just put this up properly. In around the 0.382, though I did not give the reason why, but I saw a lot of consolidation at the 1.5654-ish area, and one thing I've observed about the GBP USD is that it does not uh, it does not respect levels to the pip. It always you know goes beyond something by about 10 pips. Now the fib level is 1.5658-ish area. So going beyond that by about 10 pips is about 1.5648-ish area, is going beyond that. And a decent place to get out, I mentioned, would have been 1.5654 based on these levels out here. Did you all follow on why I mentioned 1.5654? Everyone here? Hello? Okay. So now let's see the price action now. Hi, Anne. Okay. Now let's see the price action. So here, this particular closing above has me to believe that my initial assessment was wrong. That is why when Harvey asked me what my take profit level should be, I gave him 1.5654 instead of what my initial take profit levels would have been. And let's see what happened after that. You see our another observation out here. The observation is that I did not have my stop at this level. Why? Uh, though this particular level out here is my area, the 1.56889-ish area is the area which tells me that I am wrong, but I do not have the stop loss level at that area because we know how the pound reacts. The pound tends to exceed levels by about 10 pips or so. So if I wanted to have a stop at that level, it wouldn't be prudent. So I made sure that I have my stop beyond at least 10 pips beyond that, and we were at 1.5710 was my stop. So let's see what actually turned around. The market kept on consolidating, and it hit a target, and then almost to the pip, it hit a target, and it turned around and went back up. So the market, though initially did not do what I expected it to, but by knowing how certain pairs react, instead of having a losing trade based on an incorrect analysis, we could yet convert this trade into a winning trade, right? Wouldn't you all like to do that? If you're right, you win, and if you're wrong, you yet win. So that you need to understand the pulse of different, different currency pairs, and once you are able to do that, it will just make things very easier. So, bottom line, there are a few things which I'll repeat. For those of you who get fed up of me repeating, get used to it. That's the way it is going to be, because I want to ingrain this in your brain. Certain important concepts. Number one important concept: you do not place your stop loss level at I am wrong level, because I am wrong level is a level which tells you that you are wrong, and then you have to change a few things on the ground. Number two, GBPUSD has a tendency of going 10 pips or so beyond its stop loss, I mean not beyond its stop loss, beyond the support or resistance level. It just has the tendency to do that. Let's look at various examples out here. Let me remove all this, all these lines, and let me just show it to you. Now, let us say if this is resistance, okay. If this is resistance, you see how price goes a little bit beyond before it actually turns around. Now, if this is support, okay, look at how price goes beyond the support before it actually turns around. You see? So now let us say this has become support. Now look at how the price goes beyond this support before it turns around. 10 pips beyond this support before it turns around. Now before that, to what happened, this is now the support. Okay, if this is the support, let's see how the market went 10 pips beyond that support before it actually turned around. So that's just the okay. Now let's look at these levels out here. Now this is a resistance level. Now resistance, you look at the market goes 10 pips beyond the resistance and then it turns around. So that is just what the pound does, and I observe that and I use that to my advantage. That's as simple as it is. So if I wanted to have a target out here, I would maybe increase my target and keep it at about this level. Or if I wanted my stop out here, I would make sure that I have at least 10 pips breather before I place my stop. So my stops are always at 10 pips on giving a breathing space. Then in compared to my I am wrong and I'm out of the market levels. All right. So I hope this was you've learned something today on the GBP USD trade, and though I would not have liked to start off with a trade which was a bit more difficult, but I'm glad it did come up, because that is what Forex is. It's very unpredictable.